All right, let's talk about something that's kind of terrifying. We're going to break down this thought experiment that went so viral it actually shook the stock market for a minute. And the crazy part, it imagines a future where AI's greatest success is also its biggest failure, a success that literally breaks the global economy.
So this is the core idea, and it's a total paradox. Success is the failure. See, the biggest danger from AI, according to this report, isn't some Skynet scenario where robots take over. It's not even that the tech has some big bug. No, the threat is that it works flawlessly. And because it works so well, it just accidentally tanks the entire global economy. It makes human jobs disappear way faster than anyone can handle.
And the way this thing is written is just brilliant. The authors, and we should give them credit, Citrini Research and Alap Shah, they frame the whole thing as a memo sent back from the future. Yeah, like it's June 2028, and someone's looking back, telling us, hey, here's exactly where it all went off the rails.
Okay, so how does this nightmare scenario actually play out? Well, it's not like one single thing goes wrong. The report lays out these really clever, interconnected feedback loops. Let's dig into the engines that drive this whole collapse.
So first up is something they call the intelligence displacement spiral. And it's basically a death spiral for the economy. Imagine this. A company, right? They replace 100 well-paid workers with a super efficient AI. Profits go up. Great. But those 100 people, they're not buying stuff anymore. No new cars, no restaurant dinners. And when that happens, other companies start to panic about their sales. And what do? They lay off their workers to cut costs and bring in more AI. And you can see how this just feeds on itself, spiraling down and down.
This leads to the next big idea, ghost GDP, and it's such a perfect name for it. Think about it. The official economic numbers look amazing. Corporate profits are off the charts. Productivity is insane because, AI doesn't need a lunch break. But it's all a mirage. It's ghost growth because none of that money is actually trickling down to real people. It's all getting stuck at the very top. So while the stock market is partying, the actual economy, the one where you and I live, is just quietly falling apart.
And the last nail in the coffin here is what they call agentic commerce. This is where your personal AI assistant starts doing all the work for you. Let's say you want to order a pizza. Instead of you opening up DoorDash, your AI just contacts the pizza place directly, it negotiates a better price for you, and then it finds the cheapest delivery driver nearby and hires them on the spot. It completely cuts out the middleman, the DoorDashes, the Ubers, the Visas of the world, and that whole friction economy, as they call it, just gets hollowed out.
So, okay, this sounds like everything is just collapsing, right? But it's not that simple. All that value doesn't just disappear. It gets shifted. It creates this absolutely massive, violent rotation in the market. And in this new world, there are very, very clear winners and some pretty catastrophic losers.
So who gets hit the hardest? Well, the report paints a pretty bleak picture for some of today's biggest players. Think about software companies like Salesforce that charge per user, right? Well, if a company fires half its sales team, they don't need half their software licenses anymore. Ouch. Then you have the entire offshore IT industry, a $200 billion market that gets absolutely crushed because AI can now do the coding. And all those middlemen we just talked about, the payment networks, the delivery apps, bypassed, gone.
Okay, so where does all that money go? It's a great question. It flows straight down. It skips the entire software and services layer and goes directly to the companies that make the physical stuff, the ones who actually own the compute. We're talking about the semiconductor companies, the chip foundries, the hardware assemblers in Asia. They're the ones selling the picks and shovels in this crazy new gold rush. They are the new kings.
But here's the really sneaky, insidious part of this whole scenario. The collapse doesn't start with a bang. There are no warning signs. In fact, it's the exact opposite. It starts with the most insane, euphoric stock market boom anyone has ever seen.
So the timeline in the memo starts around early 2026. Companies go on a layoff spree, replacing people with AI. And what happens to their bottom line? It explodes. Costs plummet, profits go through the roof. And Wall Street goes absolutely nuts. It creates this massive melt-up in the market, and everyone is convinced we've entered a new golden age of productivity.
I mean, the report projects the S&P 500 could rocket towards 8,000. Can you imagine? 8,000? Investors are just cheering and popping champagne, celebrating these incredible profit margins while completely missing the fact that they're cheering for the destruction of their own customer base.
Of course, we all know how this ends. It's a complete house of cards. By 2028, reality finally bites back. The ghost GDP can't hide the truth anymore. The consumer is broken. And when that happens, the market doesn't just correct, it completely implodes. We're talking a crash of over 40%, wiping out years of gains.
And you have to understand, this is not a repeat of 2008. That crisis, that was about giving bad loans to people who probably couldn't afford them in the first place. This is way scarier. This is about perfectly good loans, super prime mortgages given to people with amazing jobs and great credit. Software engineers, finance pros, the people who suddenly find themselves completely unemployable because an AI can do their job better and for free.
So the model in the report sees unemployment spiking to over 10%. But here's the twist. It's not factory workers getting hit this time. This crisis hammers the high-income white-collar workers, the tech pros in Silicon Valley, the Wall Street analysts. The economy's safest borrowers are suddenly the riskiest, and that sets off a $13 trillion mortgage crisis right at the top of the economic pyramid. Okay, so that's a pretty terrifying picture. If this fictional report is plausible enough to make real-world investors sweat, is there a way out? Can we actually stop this from happening? Well, the authors seem to think so. It's pretty wild, actually. After his own report caused him any panic, one of the authors, Alap Shah, basically went on TV and laid out a potential solution, a way to prevent his own fictional nightmare from coming true.
And the idea he proposes is an AI tax. Now hold on, it's not about trying to stop technology. Not at all. The idea is simple. When a company gets a massive windfall profit from firing a bunch of people and replacing them with AI, you tax that gain. Then you take that tax money and you funnel it directly into things like retraining programs and a stronger social safety net for the people who lost their jobs. You're basically recycling the money back into the economy, keeping the consumer afloat and stopping the whole system from eating itself alive.
Because, as the authors point out, the old playbook just won't work here. The government can't just cut interest rates and fix this. As the report says, cheaper borrowing costs don't help a structurally unemployed software engineer get their job back from an AI agent. And that really hits the nail on the head. This isn't your grandpa's recession. It's a fundamental shift in how the economy works.
So, what's the big takeaway from all this? Well, this whole scenario, even though it's fiction, it really forces us to ask some uncomfortable questions. Like, what if the biggest threat from AI isn't that it fails, but that it succeeds beyond our wildest dreams? What if ghost GDP becomes a real thing, hiding a dying economy in plain sight? And what if the jobs we all thought were the safest are actually the most fragile? It really makes you wonder if our economic rulebook is ready for what's coming.
The final question the report leaves us with is a big one. Is our economy actually prepared for AI success? It's a heavy thought, and according to this memo from the future, it's a question we need to answer and fast, before their fiction becomes our reality. Thanks for tuning in.